All right, go for it. The floor is yours.
Excellent. Okay, so I'm sharing a screen. I don't do this many times. Someone else is always sharing the screen, but hopefully you can all see this and it's not too big. I kind of played around with this, but and I'll just proceed to the next slide. Let's see if we can do this. Oh, sorry. Okay, so Eva, this must be your fancy work here. I can see that with the
well, it might have been from the old webinar.
with the window, right? With this, with the curtains being drawn. So
that's not on purpose. Not on purpose.
Not on purpose. Okay. All right. Surprised me here with some other stuff. So I'm Mark Piszko, and I head the not-for-profit practice at PKF O'Connor Davies. And so granted, fundraising is not my expertise here, but we'll share some factoids with you, and we'll of course talk about what Eva will speak to you about. And as soon as she introduces herself, we'll get the show rolling. So Eva.
Yes, good afternoon, everyone. We're so delighted to be here with you today. I am Eva Mruk, a tax partner in our exempt organizations tax and advisory group. I exclusively service not-for-profit organizations and tax-exempt organizations with tax compliance and tax consulting services. I have over 20 years of experience, and we currently service approximately 3,000 clients here at PKF annually.
Excellent. Great. Okay. So just an overview of what we'll chat about today, and this will be, roughly an hour, give or take, 15 minutes or so. But just to give you a few statistics, if you don't know them already, sort of talk about the big picture with fundraising, some motivational factors as to why donors give. There's all sorts of reasons out there as to why someone would donate to an organization. Strategies for seeking and retaining donors, right? How do you get those donors and how do you retain those donors? You don't want them to be one-shot deals, but rather to be with you and to donate annually or even more frequently. New and different opportunities to fundraise. And then, of course, the IRS regulatory framework and tax reform and policy changes that could be impactful to not only donors, but, as a byproduct of that, organizations that do rely on those donors for their dollars to be able to fundraise and to survive in doing their operations. Okay, so just sort of a statistics page here. Eva, maybe walk us through some of these interesting little things.
Sure. So a very recent report released just several months ago by the Giving USA 2021, the annual report on philanthropy for the year 2020, the report revealed some interesting statistics. Despite many facing hardship and unprecedented events amid the pandemic, there was still some strong growth in charitable giving. So here, the report reflected that charitable giving reached a record of $471.44 billion in 2020. And this is from individuals, bequests, foundations, and corporations. Individual giving continued to be the backbone of charitable giving at 69%. Total charitable giving grew 5.1%, measured in current dollars over the revised total of $448.66 billion contributed in the prior year. So this equates to more than $1.29 billion per day. The sectors that had the largest charitable giving included the education sector, human services, and environmental organizations, and also public society benefit organizations, for example, like the United Way, and those experienced maybe 9 to 11% growth. But I think with the passage of the CARES Act and the possibility of a vaccine towards the end of 2020, I believe that may have helped the market. And, with the stock market rebounding and turning around in 2020, that is what most likely aided charitable giving.
Yeah, it's interesting because foundations, as we all know, sit on a quote pile of money, and it's mostly invested. So, right, and we all want a piece of that. They are heavily invested. So, what happened to the market last year? We had big increases in the market. So that sort of explains why there was cash available to donate from foundations, and they've sort of set a record now for how many years in a row, it continually climbing. And last year, they actually gave 19% of donations, which was again a record. Individuals last year was the first time they fell below 70%. So individuals obviously are a little more affected. Not as many people invest, different economic circumstances, and certainly 2020 was no help in terms of that. So, but I thought that was interesting. Corporations, on the other hand, down. Why? Because they rely on the gross domestic product, which of course went downward, and that gross domestic product is tied into their profits, and so without that money to give, their corporate giving was down. So it all kind of makes sense, but just from experience, I can say how many of our not-for-profits had a great year in terms of fundraising last year. And it all sort of fits into this picture where their giving was at an all-time high, or just surprisingly so. Nobody thought that was going to be the case, and suddenly here they are. And the statistics prove that. So it's not only our clients, but it's sort of everyone in that not-for-profit world, predominantly. There's the museums that didn't get so much of those culturals because they closed down. So the donation shifted from them to other areas. So it's interesting to see how that all sort of worked itself out, but in the end, I think it all makes sense if you just follow the dollars. Okay. And I hope you all benefited from some of that as well in your groups, right? So why do donors give? Okay, well, there's obviously a belief in the mission of the organization, right? They've got to believe what you do in order to give to you. Belief that their gift can make a difference. Support the same causes or the same similar organizations. Okay, so there's sort of got a network of these different organizations to give to. Something to give back to the community, a feel good sort of sentiment where they're giving to your organization, but it's also giving back to the community. A personal satisfaction of fulfillment. To remedy issues affecting them or close to them. Health issues, cancer, a big one. So I've got cancer, or someone I know has cancer, and those are popular organizations to give to, those sort of cancer-related not-for-profits. To receive a tax benefit, okay, seems sort of bland, but many people do it. Political or philosophical beliefs, and of course to set an example for future generations. Right, so we've got a whole menu of items to pick from here as to why people might give, and now we've just got to pluck those things and use those to our benefit as not-for-profit organizations.
Yeah, and I'll add something to that. The donors are giving because they sincerely want to help the cause. Donors are not buying a private good, but they are buying something. They are basically hiring a charity to solve a problem.
Yeah, and that's exactly true, Eva. There's things that they're doing or expecting their dollars to do for them through this not-for-profit or organization that they're giving their money to, and
right.
they use that as a vehicle.
Help find a cure, or help the homeless.
Mm-hmm. That's correct. Or an environmental issue, perhaps. Right?
Sure.
Very popular these days. Okay. So seeking new and retaining donors. All right. So again, there's a few things on here that seem pretty obvious, and you probably know these already, but educating donors on gift planning vehicles. Okay, what's out there instead of just writing a check? How else can I do this? Can we get a little fancier here? Maybe there's a better way in my financial situation to be able to give to you without affecting my own finances and the way I'm currently living my life. So think beyond cash gifts to other assets. What is there besides cash to give? Stocks, real estate, bequests. Eva, is there anything else that you might think of that donors can give?
There's donor advice funds, which we'll speak briefly later about that, and IRAs. So there's many different charitable giving vehicles that donors can give. So it's not just cash donations. The sky really is the limit on what they could give, even volunteer services. So it's not always cash or non-cash. And we'll speak a little bit more on that a little bit
Sure.
later.
Yeah. And some of this might be thinking outside the box just a bit, if you're not used to this, if you're simply raising monies and having your galas and other types of more traditional fundraisers, and then this will start sort of getting you to think about other ways to raise dollars. The donation button on the website, all right, that's the big thing now, assuming everyone's virtual, right? Because there's still some of that as well, right? So not everyone is virtual. We're assuming everyone's virtual, but maybe not, but certainly if you are, donate button, right? So instead of mailing those donation cards or those pledge forms, there's a donation button that should be on that website. Number one rule: use outside professional fundraisers and grant writers. Okay, this is if you can't do this on your own. That's another option for you. This is we don't see this that often, quite honestly. Many times they do this in-house. We have fundraising departments and fundraising people, and I'm sure your organizations do the same. But in the event you don't, organizations don't, then they simply hire a professional fundraiser and have them do all the dirty work, and then work together with the organization to do the actual fundraising. But that comes with a price. So be prepared. We've seen a pretty significant percentage of money is going to professional fundraisers if you use them, that come right out of those net proceeds. Stay connected, obviously. Okay. Once somebody becomes part of your family through a donor request list, have them stay there. They're forever locked into your sort of address book, I'll call it, since I'm still old school. Always keep your mission front and center, right? This is what you're, quote, selling. This is what you're selling, right? You're selling yourselves, your mission. This is what's most important to you. And this is what you want potential donors to understand about you, to know about you, to sympathize with you, to gain an interest in what might be a mutual interest, okay? So make sure that that's not hidden anywhere, that anyone that opens that website of yours knows exactly what you're doing. Center the giving conversation on the difference the donor's gift will make to your mission. Right, so what's your dollar mean to us? This is very important, right? This way they understand what their monies are going to be used for, and how that helps your organization, and to what extent, and how critical their dollars are to you. So you've all got these things in the mail, and I think you've seen that, and that's sort of the storytelling, and we'll talk about it in a moment. But first and foremost, make sure that donors understand how important they are to you. And of course, there's donor stewardship, sort of making those donors feel welcome and maintaining those relationships. And Eva, you might have some ideas about that as well.
Yes, so donor retention is key to building support for not-for-profits. And in my opinion, I think donor stewardship is the heart of fundraising. It's connecting with the disconnected, and with the not-for-profit being the center of it. Thank yous are only the first step in building the long engaged relationship with donors. There's more to that. Many not-for-profits are creating a donor stewardship plan where it outlines the communication opportunities and strategies to keep donors engaged. The cost of acquiring new donors is usually much higher than retaining your current donors. Forming a team or a committee to get others, also getting others involved, board members, volunteers, present, past donors to help. What the stewardship plan really should do is segment your donors, your new donors, separate them from your new donors, your loyal donors, major donors, and then your planned giving donors, and examine their giving tendencies, the amount that they give and their involvement, and study your donors. Did they give, let's say, $10,000 gift from an IRA, or did they sign up to give a recurring gift of $20 per month? Because that matters. You know, and many not-for-profits create a stewardship matrix, and it shows when and how to communicate with your donors. So there's four areas: acknowledgement, you know, the thank you email, the call, the welcome letter, you know, a lunch invitation. Then there's recognition. Maybe your bigger donors, maybe you want to highlight them in a newsletter or a video update of the impact that their donation has given to the not-for-profit. Then there's reporting. The large donors that give many donations throughout the year, you know, you may want to update, give them a tax summary of all their donations with their charitable deductibility, give them an update on the gift use. And then last, there's outgoing engagement, you know, invite them to a gala or have them share their story. And we'll speak a little bit about storytelling, but, you know, have them report back on what their donation has done to the community. And lastly, evaluate your plan as you learn more about your donors. So that matrix is very popular now in the not-for-profit sector.
Yeah, yeah. You know, and honoring someone at an annual dinner, you know, that's all part of this donor stewardship, picking the right person, that sort of heavy hitter that will bring, or has brought, many donations and promises to do so going forward, and with the large attendance at the gala as well. So yeah, so you know, these folks should be treated as part of your family, your giving family. So always make sure that they feel welcome, that they feel like they're part of your mission, and they're doing what they can to support that mission, and you recognize that, most importantly. Okay. Individual donor cultivation, and I think Eva just spoke a little bit about this as well. These one-on-one calls, emails to donors and prospects. You don't necessarily have to say gimme on these calls, but it's more to talk about the mission and these subtleties of a conversation that result in them wanting to give or continue giving, and then showing appreciation for that to them. And you know, the other being these emergency appeals, or e-appeals, I should say, and campaigns, hosting an online fundraising campaign. This is where, you know, it's a hot button issue. You want to get out there and reach your potential audience through a sort of urgency type email, and you know, with a distinct message that's going out that is focused on one or two really urgent matters. So you know, that's another idea to have, whether or not that happens that often, but certainly in times of you know, crises, big fires, big health emergencies, these things arise and are helpful to use as organizations fundraise.
Yes, just
and of course, go ahead, Eva, I'm sorry.
Yep, sorry, just something on the show appreciation. There's the ways to show that, the way, you know, countless ways. There's non-price incentives, mugs, tote bags, t-shirts. It actually has a very strong effect, just that small token of thank you for making, you know, the world better, the not-for-profit better here. Just on the campaigns, very popular is the Giving Tuesday, the global movement of giving. It gives inspiration to a lot of people to give to charity. It's very popular, but it's also a way, these campaigns, to promote your organization or reintroduce your organization. And if holding a campaign, really should have a goal, set a goal, money raised versus number of new donors. You know, set a specific goal. For example, help us raise $50,000, or help us provide 10,000 meals to the homeless. So that goal is very clear up in front. So when you meet that goal, you can report back to your donors to show you've achieved that goal.
Yeah, and that sort of transcends into that storytelling. You tell stories about your organization, tell stories of these givers, and what those donations meant to an organization, what was accomplished through those gifts that they received. Real important, because that sets the tone, and it sort of pulls in potential donors when they hear about the good that's being done with the dollars that were donated from other donors in these types of situations. Just sort of from an accounting perspective, I think the ideal gift, and all gifts are good, the ideal gift is one that's not conditional, and unrestricted. So there's no sort of strings attached where you can just use that money any way you see fit within your organization, as opposed to a donor restricted contribution, which might have some restrictions as to use of those funds, be it for programs or for whatever reason. And the most restrictive being conditional grants, where there's a potential that you'll have to return monies, that were provided to you if you don't meet certain conditions, programmatic mostly, if you haven't fed X amount of folks, if you haven't used the money to lay the groundwork for a new building, if you haven't met certain targets, those are conditional gifts, and they're great if you can use them, they're great if you can keep them, and they're great if you're using them to do what the donors requested. But those are sort of just little caveats there to be careful about as you're recording these on your financial statements, because they might not necessarily be income. These might just be sort of liabilities due back to donors in the event that you don't meet conditions that they input those. Yeah, go ahead, Eva.
I just wanted to add a little bit on the storytelling, because storytelling could be such a powerful tool for not-for-profits to use. And they say stating facts is very different than invoking the emotion or a feeling, how someone's donation made an impact. So it's an art to tell that story, or even a picture, a photo of a house built for the homeless, and use it everywhere. A website, on your homepage. It's like the kitchen, it's where everybody goes, you want people to see the impact. Why is someone's life better because of our not-for-profit? So use stories to help spread the word of what your not-for-profit does.
Yeah, I tell you, Make-A-Wish gets me every time, right? St. Jude's Children's Hospital, you see those commercials, and it's like, whoa. So those are stories, and the actual recipients of those donations are right there, and they're speaking to you. So very powerful stuff. Okay, so at the start of last year in 2020, right, we sort of fell into this virtual world. Most of us did anyway. And nobody knew what to expect. Nobody knew what to do. What happened to those galas that we were going to have, cancellations and all, and what do we do now? How are we going to fundraise? And lo and behold, we started doing these virtual sort of galas. And guess what? In many cases, the virtual galas were more profitable than the ones that organizations were doing in person. And why is that? Because it costs less money to do these things. And folks still wanted to give it an organization because they still believed in your mission. They still believed in what you do. And so what? So they didn't get a dinner, but they still were able to contribute and get that sort of good feeling sentiment about doing a good deed in terms of dollars. So organizations really benefited from that. And I guess a lot of people were surprised, but then after a while they weren't surprised after we saw the dollars and cents and how it all sort of worked together. But it was amazing to see how quickly organizations were able to pivot to this new environment in terms of virtual events and be successful at it. But, there's a few things that they should be aware of in terms of how they do that. The ones I've attended, they usually have some program. All of them were shorter, right? Did you notice that if you've attended any of these? So instead of sitting there for dinner and the show and, the speeches and all, and 3 or 4 hours later, these things lasted about an hour and a half, so that was a nice thing. You sat in your house in your shorts watching watching this, and some performers, and they have acts and singers and whatever the case, just something to make you feel special about this. But again, the end result was that they've raised just as many, and in many cases more dollars than they would have with an in-person event. But the same story holds virtual auctions, okay, utilizing social media platforms. And then, of course, showing appreciation, recognition, and engaging with your supporters. So that none of that went away, right? Obviously, you're just doing this virtually, but you still have to engage. So it was a whole re-imaging of fundraising events, right? So now everybody had to sit down and think, how are we going to do this without doing it in person and be successful at it? And this is what was ongoing, and still ongoing in 2021. It's just now I'm thinking I'm seeing a little bit of a creep up in-person events. So that's starting to come back a little bit, but there's still, I think, a larger portion of these events being held virtually rather than in person. But I can see probably in 2022, a good bit of these are going to be coming back to in person. Only I think because I think organizations feel that they have a better connection with their donors if they see each other face to face, just like anything. Regardless of the dollars raised, there's still that connectivity that they have to sort of shake hands with their donors and be there in person and engage with them that way. And then, of course, there's this sort of IRS thing, and Eva's specialty here, converting refunds to charitable donations. So have that conversation about, well, the event was canceled or moved, and maybe we won't give you a refund, but you can consider this to be a charitable donation. I guess that kind of works, Eva, right, to organizations as well as donors benefit.
Yes, so this was a very popular question during, and I guess still is, during COVID, when things were shut down, doors were closed. Membership organizations were not able to provide benefits to their members. So this also relates to membership dues. But for example, if there was an event or a gala and it was canceled, either one, the not-for-profit had different options. One, they could postpone and reschedule the gala and just hold on to the payment. But two, which was very popular, was many not-for-profits were asking the event ticket holders whether they would like to convert their payment to a charitable contribution, get a deduction. Same thing with the memberships during the period of closure. Convert either freeze, you could freeze your membership dues, or convert again to a charitable deduction. So this, again, very popular question amidst the pandemic.
And I guess that took away some of that, what you put on the bottom of your event tickets, where you say, well, $150 is tax, deductible, or to the extent it is, or whatever the case. I guess that eliminates that, doesn't it, Eva, where you have actually the ability to then, because you're not getting anything in return, the entire amount then becomes
Absolutely.
deductible, correct?
Yes, yeah. And we actually wrote an article on this that was published in the New York State CPA Tax Stringer publication. Yes.
Great. Okay. So that works to everyone's advantage, I think. All right. So now we're heading into tax territory. Okay. And the IRS. So Eva, I'm going to turn this off to you and just explain some of these things to us and what's going on there and how this is going to help us and what impact does this have on donors? Because I'm getting a little nervous here. It's almost the end of the year.
Sure, this is my area. Well, as not-for-profits are expanding their donor base and soliciting contributions, not only in their home state, which could be just New York, but outside of New York, there are state charitable solicitation rules and registration rules. And the rules could be very tedious because even having a donate button on your website and getting contributions from out of state may trigger additional paperwork. So registration with these states and annual filings. So some of our not-for-profits file in, there's 38 states that set these rules. So some of our not-for-profits are registered in all these states and annually file. The thresholds generally are 25,000, but that's just generally speaking. But many not-for-profits are looking, to us and other firms that do this work to file all these state registrations. It could be a very tedious process, but that's just something to be alert for. If you're venturing out, getting contributions from out of state, keep this in mind that it may in fact trigger, additional filings on an annual basis.
Right. So I'm a not-for-profit, happy-go-lucky not-for-profit, and I'm going to do what these guys told me and put that button in there on my website to say donate now. And lo and behold, I operate out of New York, but I'm getting a donation out of Arizona, out of California, and all over the map, and they exceed the limits. I suddenly have a little more homework to do. Correct? I have to do now state registration filings in those states where the IRS deems us to be, quote, fundraising. Right. So now we're fundraising without even knowing it. We're fundraising in different states. So there has to be state filings in those various states. And like Eva said, either asking us to do those filings or doing them yourselves or having someone else do them. But certainly, I guess that's a little bit of a catch there that organizations should be aware of.
Yes, and just a little bit more on the IRS side, the IRS requires donor acknowledgement letters to be issued to donors. Generally, if the donation is $250 or more, it's the contemporaneous written acknowledgement letter that the donor needs to take a tax deduction on their personal return. So just to be aware of the substantiation that's required of donations. And if there are non-cash donations, there also are two other forms, the form 8283, where also an appraisal may need to be required to be obtained by the donor if the non-cash donation is $5,000 or more. So that's a form that a donor may provide to the not-for-profit to acknowledge the acceptance of the contribution. However, if the not-for-profit were to sell that non-cash artwork or the non-cash donation that was given, within 3 years, there's a form 8282 that must be filed by the not-for-profit and filed with the IRS. It records the fair market value. So the IRS is trying to ensure that the donor didn't claim a higher deduction, a charitable deduction. So the IRS is trying to cross-match the values. So that's the point of that form, but it's just something to be aware of. There's cash contributions, but we also distinguish that from contributions of goods and services. So someone may want to volunteer their time, or a neighbor may want to donate the use of their space. They have some extra space and they want to donate that, share that space. Contributions of goods and services are not deductible. Those are not charitable contributions. So the donor never gets an acknowledgement letter and could never take a charitable deduction for that. And then there are quid pro quo contributions. And this is generally with special events where, you're attending a gala, you buy a ticket, but you're getting something in return. You're getting a return benefit. So the dinner. So there's two pieces to the contribution. There's a pure contribution, but then there's also that piece where you're getting that return benefit. So quid pro quo contributions also require a substantiation acknowledgement letter, I believe, if it's $75 or more. What I want to say also is, I want to speak a little bit about cryptocurrency donations, because those are in the news quite a lot, and they're becoming very popular in philanthropy. So accepting cryptocurrency donations may be an opportunity to reach a new donor population. It's the investors are generally younger, the younger generation, and generally the male sector. Their cryptocurrency, despite the word currency, they are treated as property. They're not treated as currency by the IRS or a marketable security. But they are becoming very, very popular. So, you know, going now to the gift acceptance policy, it's not-for-profits, it's a good practice to have that gift acceptance policy, because that policy outlines the type of donations a not-for-profit will or can accept, and it sets forth the limitations on donations that they will not accept, and could serve as a good guidance. You know, some not-for-profits post their gift acceptance policy on their website, actually right next to the donate button, but it is a good thing to have because it reflect what you cannot accept.
Excellent. Good. Yeah, it's a lot of stuff there to worry about, Eva. Geez, I can't even accept a gift without something in return. So a lot of questions come back. If I get a $200 or $300 gift, do I have to, in my acknowledgement letter to the donor, do I have to state the amount of the gift, or I could simply make it a sort of a general statement about IRS deductibility?
If it's a cash donation, then you reflect the value, then the amount of the cash donation. If it's a non-cash donation, like a work of art, then it's the donor's responsibility to assess the value. So it's acknowledgement letter just saying thank you for the gift of art that was donated on this date, but the value is not set by the not-for-profits, because that's the donor's responsibility. Mm-hmm.
Yeah, and same can be said for stocks, right, as well. We don't normally put a valuation on that. We leave that up to the donor and his tax attorney or accountant.
Sure, yes. So usually with appreciated stocks, usually the not-for-profit liquidates it right away. So sells it rather quickly. Yeah.
That's right, on their end, right? They don't normally hold and invest, but rather just sell. Okay, some more fun tax policy changes.
Yes, with the Biden tax plan, there's a lot of things in the air right now. So, you know, with charitable giving, there's big changes, I believe, coming to the capital gains tax rate, and also changes to the estate tax system. So also I'll speak a little bit about the year-end planning, because the biggest day of generosity is usually at the end, and it's usually December 31. So preparing for the changes, the capital gains tax rates are being increased. And because of the income realization, you know, income realized from investment growth, individuals may want to decrease their income tax liability by upping up the money given to charity. So that's something to look out for. There may be more charitable giving.
Well, is it supposed to be? Oh, wait a minute, make sure I'm muted. Hold on, let's see.
Is that muted?
Yeah, here.
That was Wade. There he is. Go ahead, Eva. Wade, it was just when that muted.
I see. Okay. And then, you know, I want to speak a little bit just before I go into the donor advised funds and IRAs on estates, because there's changes on the estate tax planning forefront. Transferring a planning technique is transferring large sums of money out of people's estates into trust, setting up, you know, transferring large sums of money out of your estate into trust set up for, your loved ones through 2021. So that cumulatively transfer, the old rules were you could transfer up to 11.7 million free of estate and gift taxes to that financial vehicle, like a life charitable remainder trust. There were some talks that with Senator Sanders, I believe, he wanted to decrease that exemption down from 11.7 to 3 million. But I believe it's looking at, the exemption is now looking at that it's going to decrease almost in half. So it's going down to around 5 million. That's what I think the plan is setting forth, and that's effective January 2022. So, there's charitable giving, there's probably going to be more charitable giving just because of that, moving estate money around to, avoid those estate taxes and gift taxes. But that's not only on a federal level, it's also on a state level as well.
And Eva, that's in the works, or is that already settled and put into law?
I don't believe, from my reading this morning, I believe it's coming down to the 5 million, but it's still not set in stone.
Correct.
Yes.
Correct. Okay. Great.
Yeah.
And donor advised funds, that scares me, but what is that?
Well, donor advised funds are actually very interesting. It's giving, it acts actually, it's a private fund and administered by a third party to accept donations. So it acts like a private checkbook. And so the donor gives money to an donor advised fund, but has advisory privileges. So we could advise the donor advised fund sponsor where the money should go to and to what charity. I mean, the donor advised fund sponsor does not need to act on it and listen to it. It could be you're recommending it. It doesn't have to act on it, but normally it does because you are the donor. So normally it does. But the thing with donor advised funds is there's been a lot of scrutiny with the IRS because the scrutiny comes in with the timing. When a donor gives to advised fund, the donor gets an immediate tax deduction upfront, an upfront tax deduction. But the scrutiny comes in because the money may not be distributed to other charities until many, many years down the line. So it's timing. And that is where, they say it's not fair for the donor to take an immediate deduction, yet the money is not released to charities and benefit the charity and benefit communities. So with the Accelerating Charitable Efforts Act, that's also known the ACE Act, which has not passed yet. It's still, again, that one is getting scrutiny as well with the private foundations, but they're looking to set a time limit as to when donor advised sponsors need to distribute that money to charities. I believe they're giving a 15 years, and then there's another one, a longer period. But also with donor advised funds, many of the the bigger donors like to stay anonymous. So when you're filing your 990 Schedule B, the donor is never reflected, remains anonymous as if it's given from the donor advised funds, and that donors like that. So there's scrutiny there because the IRS is saying that they may look through and need to be reported to the actual individual, which may cause tipping problems now for a lot of not-for-profits who have that public support test. Public charities need to maintain public support, and it's usually 33 1/3%. But reflecting a donor advice fund on your Schedule B is okay, but if you need to be reflecting the individual, that will cause a lot of not-for-profit public charities to tip, meaning tip to private foundation, which is not the worst case scenario, but it's not the best either. But again, all of this is kind of still up in the air as to what transpires with this.
Right. Yeah. So obviously there's a few issues going on here, both from you know, an IRS perspective, and then certainly for an individual, and then there's the case where there's a tipping, perhaps if there's a real concentration of donations from one particular donor, you know, to an organization that might tip it to a private foundation. Eva, we did have one question from Caitlin. And perhaps you know this, what are examples of the biggest / most utilized donor advised fund quote sponsors?
Specific DAFs?
It's what it sounds like,
I
correct.
see. What comes to mind, I know Fidelity Charitable, Fidelity is very popular. A lot of the community foundations even act as the DAF sponsors as well. So a not-for-profit could be a DAF sponsor as well and hold DAFs. But Fidelity Charitable is a popular one.
Yeah, you know, I've seen examples of not-for-profit organizations that act as DAFs, you know, that accept donor advised funds, and you know, they follow the same rules and remit those monies to other non-for-profit organizations as directed by the advisees or the contributors to those donor advised funds. So
Yes.
In a very similar way to a Fidelity, for instance. Right, exactly.
Yes, and then with the DAFs, as I mentioned earlier, the scrutiny comes in with holding the funds, no different than just with the IRS, with colleges and having endowment funds, holding endowment funds and not releasing the money for the greater good. So that's where that big scrutiny is out there on the forefront with DAFs and colleges and holding these, you know, the Ivy League schools. Usually it's the Ivy League schools that hold that endowment fund. So they're imposing a tax on those endowment funds for colleges and universities. But it only impacts, I think, 17 of the Ivy League schools. I know this is beyond the scope of this webinar, but I think the pieces, you know, putting the pieces together as to releasing the funds to charities, using the money and not holding it.
Yeah, there's always that question about how rich can the endowments be for those universities, and how they continue to grow without being spent. So we have another question here. Oh, we might have two questions. So let's see. From Don, how specifically do you see larger charities cultivating working with Fidelity community foundations? Oh, I don't see that too often. I mean, again, the ones I've seen are the DAFs, but on the private side, Eva, have you seen that?
We on a community foundations?
Well, this either Fidelity or community foundations, right? How do you specifically see larger charities cultivating or working with those foundations or community foundations and Fidelity, for instance?
I think it's more increasingly popular. We're seeing more and more of that engagement. It's an interesting charitable vehicle, but just with that scrutiny going on, but it is more increasingly popular in the not-for-profit sector.
Right. So, right, you don't see anyone shying away from that, right? There's more of a push for that, and introductions being made and conversations being had, and this becomes part of the attraction to an organization by working with an organization like a community foundation or a Fidelity to get donors to give to those funds and ultimately to the organizations themselves.
Yes.
Okay. So Denise had a question to everyone. Okay, Don, thanks. You're welcome. Denise, that everyone. Okay, Lauren, you can answer this too. You know, this one goes to everyone. The Morris Park Alliance has a DAF at the Community Foundation of New Jersey to support the Don Palmer Internship Fund, which provides up to 2 grants per year to environmental not-for-profits working in Morris County. Okay. Oh, you made a statement. Okay. Oh, I like that.
Very nice.
Okay, Denise, thank you.
Yeah.
Well, exactly. So, right. So,
Just sharing.
just sharing,
Sharing.
perfect. And this is a typical example, correct. So there's a foundation or holding a DAF, and the money's being directed towards this Don Palmer Internship Fund, and that's how it's being used. So,
Yes, but
you know,
something to stay tuned to is that Accelerating Charitable Efforts Act. More to come on that. Now, just a little bit on some other provisions with the CARES Act. In 2020, that provision allows individuals to deduct 100% of their adjusted gross income for charitable cash contributions, and that's through 2021. So that increases charitable giving. You know, there's the charitable IRA rollover provision where you could transfer the annual required minimum distribution directly to a qualified charitable giving in order to exclude that distribution from their taxable income, while also supporting the charity at the same time. So once you reach that age 70 and a half, you're required to distribute. So rolling over just to avoid that tax. Then there's also another option of converting a qualified retirement account into a Roth IRA. And it could also, that's also a good way to avoid that top marginal tax rate. So those are some things on the IRAs. They also very popular vehicles with individuals. And last, this is really a little bit out of the scope, but there's a very new thing, I think, or more the thing that's becoming a little bit more popular. Is called impact investing. And this is a way to not get donors, but to attract investors. So it's through a use of, it's what it's called a SPV, a specialty purpose vehicle, where a not-for-profit could access capital funds through getting a limited partnership or working with a corporation. And that's attracting investors, but not donors, but that also could enhance your mission. So impact investing is becoming a little bit popular these days in the not-for-profit sector.
wow. Okay. So that's a lot going on there, Eva, a lot to absorb, but I think we're running out of time. So let's just wrap this up and the road ahead. You know, some things to remember, just to refresh here. You need strategic planning. Okay. So you just don't wake up one day and decide, here's what we're going to do. You actually have to plan things out. You consider, you know, things as you're looking for a new fundraising landscape, and that's how people are coming back to work, workforce reductions, you know, who's not working, what's happening to the population of workers. Those are all potential donors. You know, 2020 was a great year. Is that going to happen in 2021? We'll see. Consider your fundraising goals, right? Set goals. How much money do you need to raise, and work towards that goal? It's always nice to have something that you're aiming for, so that you know how well you're doing in terms of those efforts. Anticipate financial aspects and reductions in funding sources. That's correct. You know, again, keeping in mind who your donors are and what their financial situations might be. And I don't mean just personally, but, you know, just understanding what's going on in the economy and changes in tax laws and stuff. And that's why we're here, to help you. But certainly being familiar with that and how that might impact your fundraising goals. And be flexible in your approach to reach funders in 2021 and beyond. Don't always think it has to be the same old, same old. You know, you might want to pivot to other types of fundraising events or methods. right? So just sort of break the mold and be flexible in how you're doing this and be creative in your fundraising efforts. Okay, there goes my little alarm. It's 4 o'clock and I think we're okay. Lauren, I think that wraps it up for us.
Thank
Unless there are
you.
other questions.
Yeah, are there any additional questions?
Denise has a
We have-
question.
Yeah,
And we
I
have
have a quick one,
we have
sorry.
our address and at the front, in case anyone has any questions, feel free to reach out to Mark and I.
I actually just had a quick question. Just now, when you were talking about impact investors, are they expecting a return on investment?
They
Typical to
are,
other-
yes,
Like a cash return?
true, correct. It's
Okay.
they're not considered donors, they're considered investors. So they're looking for a capital return of capital. Mhm.
I was kind of hoping it was a return on investment of, building a better community or something.
Not money.
Besides,
Yeah.
as opposed to the cash.
Right, yeah, sentiment rather than cash, right? Yeah.
Yeah.
Okay, hey, we got to thank you. Okay, thank you for organizing. Well, you're welcome all. We're happy
Appreciate
to,
it.
we're happy to be here with you.
Would you mind, Mark and Eva, putting your email address in the chat section or wherever else you'd like to include it in case people want to reach out, or another way of connecting with you, whatever you like.
Absolutely, we can do that. Okay, or we can just send it to you, Lauren. Is that
Perfect.
helpful? And maybe you can share that with others.
We'll distribute this recording. And if you wanted to provide the presentation, it's up to you. I can also attach that as well.
Sure.
Well, she did that. Okay, let's see. Since Eva had done this already, she's quick to the trigger. I'll do the same. Okay. All right.